here for the investor panel. If you're not familiar with me, my name is Chango and Chain. I host a podcast called Interchain FM. I also run a validator. I was part of the early team at Cosmos with Sonny and the other Osmosis guys. And welcome. Who's ready to extract some alpha from these investors? Raise your hands. All right. Let's go from here, from this way to the very end, and go ahead and give your intros.
Hello. Thanks everybody for coming. I'm Nicola, Lemniscap partner since, we're a crypto native investment firm since late 2017, early 2018. I'm there since. Investors on many of the Appchains actually here today. And thanks a lot for having me.
Congrats.
Hey everyone. My name's Ali. I'm with Reciprocal Ventures. We're a thesis-driven investment firm specializing in go-to-market and distribution strategies for all of our portfolio companies.
Yeah, for sure.
Hey, great to be here. My name is Marek. I'm with RockawayX. We are a technology company as well as investor in the space. We invest in multiple strategies like funds of funds, direct investments, credit, and operate more than 50 networks across the space.
Awesome, thank you. My name is Alex Golding. I'm a venture capital investor at Delphi Digital. As many of you know, Delphi has a research arm where we've put out a lot of research on roll-ups, on Appchains, et cetera, on the modular thesis. A labs division where we built our own apps and Appchains in the Cosmos ecosystem, as well as a ventures division where I sit. We have 150 portfolio companies. We do pre-seed, seed, sometimes Series A, $500K to $3 million checks. We have about almost 200 portfolio companies, and doing a deep dive in the modular ecosystem. So you'll hear about that later on.
Hi, I'm Dan from Nascent. We are early stage venture investors and active ecosystem participants. We work with folks at the pre-seed and seed stage. Occasionally we go a little bit later, and we're very active both on and off chain. We love doing DeFi and infra, and Appchains and kind of modular stacks have been a focus for us for the past couple years.
All right. So, Dan, I'll start with you. Dan, I actually read your blog post that I think you wrote in 2018 about liquid collateral, and that has since aged really well because now look at where we are with restaking and everything. So, what is it about Appchains that you're seeing the alpha in?
So actually a couple of years ago I wrote about the case for a uni-chain and kind of like why Uniswap and other apps would ultimately move to their own chains. Yeah. I still believe very strongly in that. It was, I think, a lot of people in the Ethereum ecosystem at the time didn't see that, but there's so much value being leaked to validators, being leaked in the form of MEV, and so much more control that you can have over the user experience by going to an application-specific chain. And I think we're just starting to see that. Obviously, the Cosmos ecosystem has really been on the forefront there for years. But as roll-ups have become increasingly popular, people have been approaching this from more of a modular stack approach to get costs down, get speeds up, be able to integrate across chains, across roll-ups faster. I think it's just going to be increasingly obvious that this is how you create experiences that match what Web 2 users expect when they come into crypto.
Wait a second, but 6 months ago I heard that Appchains were dead. Is that wrong? Wait, you tell me.
I think that was a great chance to buy the bottom.
I agree.
Yeah, don't think they're dead, but I think that post then was really a trendsetter in a sense. I really liked it. I talked to many portfolio companies. I think that was a sort of like an emancipation. I don't know, like a way to freedom for certain ecosystems that became too big to be on a layer one, mm-hmm. right? And I still believe that Appchains are the right solutions for those ecosystems that became just too big to be too constrained by the layer one rules, right? Yeah. So it's a rule it's an avenue for freedom, maturity, and I do believe that the Appchain is more suited for an ecosystem likely already mature.
Totally. Where's DYDX? Are they in the house? I think I saw a few of them here. Anyway.
Yeah, I'd just like to say, I think it's very interesting if people ever say app chains are dead. I think a much better way to have said it, especially 6 months ago when people didn't realize that the bull market was coming or the average person didn't, it's better to say that app chains are very useful for larger applications or for people that are in these, what I think are more specific, who have very specific needs. So DYDX, huge protocol, can handle its own app chain and has specific needs that it needs the chain to be customized for. But I do think that 90% of things can fit on an integrated or modular chain. That being said, I think that for people who want, as our apps gain more users and gain more traction, and speaking crypto in general, we will need more app chains, and that's why we invest into Inisha. Because Inisha solves the interoperability issue, right? Because you've got the biggest issue with the fragmentation of liquidity with all these roll-ups and with all these app chains is that they're bitch to use, right? If you go into Cosmos and you're trying to do things, it's a real pain. It adds a lot of friction, adds a lot of time in between transactions, whereas Inisha has this really cool system with this base layer of Inisha, and then the Minutia is sitting on top, and they've got a liquidity layer for aggregated liquidity, or what they're calling enshrined liquidity, so you can do cross-chain swaps with them, and I think that's really cool, and I think that by making everything much easier and fixing the interoperability issue, you're going to see a proliferation of these Minutia app chains going forward.
Is it implied that Delphi has invested in Inisha?
I think that's an irrelevant question, right? Because what we like to look at is when we invest, we like to look at what kind of new behavior will a technology enable, right? So while yes, we did invest, and yes, that came out earlier this morning, when we were looking at this deck, this was in the middle of the bear market, and we were looking to the future, right? What kind of new behaviors, what kind of new activity will this new technology suite offer? And I like to think that all of us here on this panel think that way. But I kind of take a little bit, I bristle a little bit when people are oh, did you invest? Because I think that technology can be good in absence of an investment.
Oh, yeah, I think it's perfectly fine. I mean, this is a panel where we're sharing the alpha, right? I think there's been some signaling to the community about this new project called Inisha, and they're doing some great stuff.
As a fellow Inisha investor, what I'll add is I think what I love about it is anybody who's here is probably very familiar with IBC, and we really love IBC as a standard. It hasn't grown out beyond the core Cosmos ecosystem yet, but what I love is that Inisha has built that in as kind of a first-class citizen, and as we're seeing this explosion of new chains, of new roll-ups, the big challenge has been well, IBC would be great, but you're going to have to go and do those integrations with the other chains, and the hub and spoke model it enables, so you can actually be IBC integrated and available from day one at launch without having to go around and do those partnerships. That is huge, and so I think that this hopefully will be an unlock for people who want to go with the kind of modular stack and be IBC connected.
Yeah, and you touched on something that I've been observing lately too, which is IBC can be used as a general transport layer underneath a higher level transport layer, like layer 0. I think Hyperlane might be doing something with it as well as a primitive. And so IBC is going to be around, but doing as you said, the BD work and the expansion to other chains is going to be done at a higher level. Ali, I want to go to you because we touched on this topic earlier, which is local markets and local fee markets as well as globalized fee markets, and why it might make sense for certain projects after they become too big to grow out of their little petri dish of a monolithic chain, let's just say, and evolve into the Appchain world, like DYDX.
Yeah, for sure. So let me quickly get a show of hands of people in this room who've experienced high gas fees. All right, there's your product market fit, right? So one of the things that I guess I consider myself very economist going to UChicago, but I think a lot about, what are the implications of some of these fee markets that we have today. And so the example of local fee markets, right? Let's say you want to buy a gallon of milk. You can go to Costco and you can spend 30 minutes trying to find parking, an hour trying to get through the store, and then 30 minutes trying to leave, right? Just for a gallon of milk. Or you can go to a grocery store on the side and get that gallon of milk in like 5 minutes, right? And so the concept of local flea markets is that why should you be penalized for demand for block space that's happening somewhere else, right? And we've seen this, right? When gas gets extremely high, like maybe a new token is launching, maybe there's an NFT drop, and you're just trying to transfer Ethereum or some kind of token from your wallet to another wallet, you have to pay that extremely high gas price, even though you're not minting this NFT or trying to degen into this new token. And so, I take it back to like this concept of local fee markets that app chains enable, where regardless of what's happening across other ecosystems, the demand for block space is just based on what you want and the kind of area that you're trying to compete in. And so that's what I think is like really fascinating about app chains, is that it opens up these like local fee markets that we are seeing in other chains as well. But I think for app chains specifically, the local fee markets are something that improves the user experience, makes it more seamless, it results in cheaper transactions, and it also matches supply and demand for participants in an economic ecosystem that traditionally have been exposed to other areas that they have no demand for. So that's, I think, something that's like really fascinating, and I'm starting to see more and more of the development in this space. So yeah, excited about the local fee markets that app chains enable. And I think this could be like a really cool use case for the user experience, who we should care about. And it actually does a lot with like product market fit that we're trying to see, and we're starting to see in this space.
Show of hands, do any of you think that block space is scarce? Nice. What do you guys think?
Well, it's one of the reasons why you build your own Appchain, in a sense. Mm-hmm. I mean, you should have very clear ideas of like the speed that you need, the architecture that you need, the flexibility that you need, the block space that you need, and the use case to attract the target audience. But when you decide to build an app chain, you definitely have to have a very clear ideas of your needs. Mm-hmm. And block space, I think, is one of the main reasons for the projects to go that way.
Yeah. So what's your investment thesis looking at the current state of the crypto market?
Come again?
What's your mental model that you use when you're looking at deals, and how do you invest based on that?
Yeah, like for me myself, looking into the app chains is not really different than like looking into any other projects. I think that the tech stack is going to get much more fluid. So we have seen already like render network going from Ethereum to Solana. We have seen that you can go from an L2 become an app chain, and I think there's going to be like much more fluidity based on the optimization, based on the performance, cost, security model, and different assumptions that the different project needs. So there's going to be migration to Bitcoin, whatever. And this is going to be all driven by whatever the end user needs. So anytime we look into the new projects, we try to evaluate it not on the, is it a good app chain, but rather, is this something that is valuable and is unlocking something new that was not possible done before? Mm-hmm. And if that's yes, then I think like the market will somehow decide like whether it should be an app chain, it should be an L2, or what is the maybe L5 that are Zcafied or fully homomorphic encrypted is the answer. We just don't know, and so I don't try to make that prediction. However, anytime I look into the app chain, I think I try to somehow justify why it should be an app chain. I think if the team decides to build from day one as an app chain, it has some kind of a additional strain on the team, either on the resource or also on developing the tokenomics, legal. Once you have a live token, you need to manage the validator set, etc. There's like a lot of work that you're adding that is like beyond the product and core needs that needs to be solved. So when I'm looking into the app chain, I try to answer, should this be an app chain from day one, or actually is there like a maturity curve on which like this can start as something else and then go into an app chain model when it's actually mature.
Mm-hmm.
Yeah, I'd love to talk about this. I think that when we look at app chains in general, if it's a pre-seed, pre-product, pre-revenue company, right, just kind of like an idea, or maybe they've got a few lines of code written, for me, it's almost like a biz dev question. So it's not a matter of tech, right? You can literally go to roll an app chain as a service company, and you could spin up your own app chain if you need it, or your own roll-up. For me, it's okay, are you in this minority of use cases that's going to require having your own state? Are you in this minority of use cases that's going to be, like Ali was talking about, having so much usage that you don't want interference from other applications or other actors on the chain? And so I think that's like, when it comes to app chains in specific, that's that's the core kind of like thesis that I'm looking at there. When it came to so I'll stop there, pass it off.
Yeah, I completely agree. For me, go-to-market is the big question. We get so many pitch decks from people who are like, we're building this on an app chain. And it's like, don't care. How are you going to get users? How are you going to bring people in? And I think that's the big thing to answer. Then when we look at teams that are doing, I would say, like deeper tech infra, stuff in like ZK and stuff like that, the question for me always becomes, what new economic activity are you enabling that would not have been possible without this infrastructure stack that you're building? And a lot of teams are very smart, are building stuff that's like, I geek out on, I think it's very cool, but if you can't show me like what are the net new economic activities that are going to happen, the trades that will happen, the borrowing, the lending that will happen, the collecting that will happen, that wasn't possible without this tech stack, it's going to be tough, because then it feels more like a research project. And so I think you need to at least have a thesis for what type of usage you're going to unlock, or what new users you're going to bring in or pull over from a different application as a result of bringing this to market.
Yeah, and just kind of talking about kind of what Alex was also saying about the go-to-market side of things. I think community is extremely important, and so kind of what Dan and Alex were saying is like, you might have the most like deep tech, complicated AI crypto project that's out there, but it does come down to how do you plan on really going after users and getting the community behind you. But aside from that, we're also looking at like unique solutions to problems that we've seen existing in other ecosystems. So, we invested in Skip protocol for one of the reasons that Dan was talking about, is like solving the MEV problem on the Cosmos blockchain ecosystem. And it's a very complex problem, but it's such a big vision, and the fact that these two founders like Barry and Mag were able to like go after it and say like, this is what we want to accomplish, like that gives us a lot of confidence. Like they're really thinking about this problem, and now today with Skip, they've not only launched like an MEV solution, but they've also launched like a Oracle aggregator solution called Slinky, right? And we love seeing that, like coming up with these new ideas that they're in the space. They understand the problems that a lot of these protocols are facing and app chains are facing, and they're trying to solve this. So, those are kind of the things we get really excited about as well.
Yeah, very good points. Well, Marek touched one very important questions that we're asking ourselves on the fluidity. Technically, app chains now are, or could be seen as layer 3s in a sense, right? And there's a lot of competitions coming there. So teams are asking themselves those questions, and I think when the shared sequencers will be a reality, will be probably a game changer. Those L3s can talk to each other. So yes, you have more freedom on app chain, but you have a lot of more, or you could have way more composability being an L3. And of course, we know of all the roll-ups as service that come up every other day. And the last point he touched, one of the first points actually touched on the token. It's very important because you need to know how to operate. You're creating a crypto network, and it adds a lot of complexity, of course. Why? Because now L3s can actually get incentives and attract users simply doing nothing on the token side, but leveraging the L2s, right? So that's a inner competition in a sense with Appchains, and we're looking at that quite closely.
All right, to the audience, show of hands, how many of you have noticed a re-centralization of a lot of the underlying tech stack over the years? No one?
I don't understand the question even.
Huh?
We don't understand the question. So.
You don't understand the question?
We understand the words, but like not the...
Which part of the tech stack?
Recentralization, I think, right? Recentralization, like with shared
Re-centralization.
with the sequencers, right? On L2s.
Well,
You're
not,
referring to-
not only the sequencers, but like RPC infrastructure, just in the peer-to-peer layer. Has anyone noticed that? None of you?
I think it's not like an overall trend, I would say, across the industry. I think there's much more of a kind of like barbell approach, right? We're seeing some teams that are really like maxing out on decentralization, and we were seeing some teams that are saying, hey, we're only going to decentralize the minimum things that we need to get the qualities that we want around censorship resistance, around permissionlessness. And then they're saying, well, for UX purposes, we're going to centralize all these other things, and people do have essentially decentralized escape valves from here. They do have self-custody. They do have these other things that we value. So certainly there are now projects that are much more centralized in their stacks overall than we might have seen 4 or 5 years ago, but there's other things that are more decentralized because the ecosystem has grown, because the validator sets have grown, because there are more different infra provider options.
Yeah, I would also love to jump in here. I think that there's certain trade-offs that were made when certain protocols came to market. People were saying, okay, we could come to market with shared sequencers, we could come to market with all this stuff, but it's going to delay our launch. And so, what's the quickest way to get out to market? And so these builders had to make like these product trade-offs, and they said, are we going to launch with most things decentralized and a few things centralized, or are we going to wait for the perfect and like maybe never ship? Similarly, we're seeing this with, like Dan was saying, that there's some people who just don't give a fuck anymore. I've been getting pitches where the entire chain for a certain ecosystem, the entire L2, is just a series of centrally owned multi-sigs, right? Or you're seeing. I've been in calls with founders where they say that it's decentralization theater, it's not real, blah blah blah. And at Delphi, we don't agree with that. And one of the things we're doing actually to combat this is later this year we're launching MetalX, which Gabe Shapiro, those of you who've been in crypto a long time know who Gabe is, one of the top crypto lawyers in the world, has created a new form of DAOs, because the issue with DAOs is that they distributed risk over every DAO member. So if you were a member of a DAO a year ago, or even probably today, you probably have unlimited legal and financial risk if that DAO ever messes up. And so MetalX is a project that we're launching through our venture studio later this year that uses part on-chain code and part like meat-space law to separate out the liability. So that way the core contributors or the people or the core council members, whatever you want to call them, have the liability. And whereas the general DAO members, which will be the average person, right? Again, power law 90-10, don't have that liability. And you can say, why is this even happening? Because of something called Ooki DAO, OOKI. Look this up. It was a big case last year. Ooki DAO basically found that every member of that DAO was legally liable for the mess ups of the DAO's kind of operators. And so we are trying to decentralize or to limit the liability that people have in DAOs. And I think that that's super important, because if we can kind of chip away at the centralization of risk in every part of the stack, and we can just add, and this can be our contribution to the space for 2024, that makes us at Delphi really happy, because we want to contribute to the space.
Yeah. I mean, that's fantastic. I will also, resonate with the centralization. So like, we also run labs at RockawayX, and we have built observatory.zone, and it's basically a set of products that are observing the app chains or different Cosmos ecosystem chains and measuring their decentralization, based on multiple things, where the geographical collocation is, whether it's a white label or not white label, what is the distribution of the stake, and then we go like much further beyond, even up to the ISPN level. So like seeing like what is the internet service provider, where exactly is the servers located. I mean, couple of learnings. I think like we did it also as something where we wanted to help the ecosystem to help decentralize. We work with the foundations to manage their stake and delegate it in such a way that the decentralization actually is meaningful. At the same time, we also have, let's say, a B2C, possibility to stake your tokens across the chains. If you just want to, you don't know which 50 validators you would like to delegate to, but you would like to support decentralization, this will do the calculation for you, completely free. Anyway, however, there is like one, takeaway from that I have is that I think a very core group of crypto participants by nature care for the decentralization. As soon as we start expanding, and I think like we are at the point of the history where the pie is beginning to expand, and the new participants don't care that much about either privacy or decentralization. So I think it's extremely important to actually, us as I would say like leading participants within the ecosystem, to make sure that the anti-fragility within the system is somehow taken care of, because people will not care.
Yeah, and hello, testing. Okay, cool. I think it's working. So the way that I'm kind of framing this is like, so you've heard about centralization. I think one of the other kind of areas that I see is like kind of linked to that is really composability with app chains, right? When you're building an app chain, you're customizing it as much as you can, and it's very unique, right? And part of it is that it kind of limits the composability of the app chain. So no longer do you have like two chains being able to talk to each other if they're built on different infrastructure, they're using different protocols, they're built like customized. So that's kind of like one of the issues that I do see kind of arising with app chains. But the counter to that is actually two things, right? The first is some app chains, I feel like, may not need that level of composability, especially if they're focusing on a very specific use case. So like if you're building a gaming protocol or like a game on chain, and you decide to launch an app chain that's very specific for this game, you might not care about DeFi, some of the NFTs, some of the other stuff that's going on. Like you just want it as customized as possible, and for you, composability isn't as big of an issue, which is fair. But I think the second thing that we might see happening is really, in the future, we might see these like customized app chains start building out, and later on down the line, they might realize that actually they need to open up the composability of their frameworks. And so we could see different app chains just building together, these kind of trading blocks, if you will, of being able to be composable with each other and talk to each other, while, still ignoring some of the larger composable aspects of the whole blockchain. And so I think those are some interesting categories that we might see emerging, is that these groups of app chains are composable with each other, but they're not composable with the whole ecosystem. And I think that's going to be a really fascinating dynamic that we see today.
I think they will be composable with the whole ecosystem, but I think what we talk about as composability today is like a limited thing, right? That we often talk about composability in terms of pure synchronous atomic composability, and while I think that's amazing, it allows things like flash loans are possible, right? And atomic arbitrage. I think that's 5% of the value of composability, and having asynchronous composability is going to be fine and for the vast majority of use cases and scenarios. And as market infrastructure is building up, we're seeing more abstraction away from the underlying chains. If 10 years from now, users are still thinking about when they like tap a button on their phone or blink something in like their headsets, like we've lost, right? We're not going to be expecting the average person to even think about this. It needs to be abstracted away through both technical infrastructure and markets infrastructure for knitting these things together.
I mean, a lot has been said, and I think we're also close to time. To me, Appchains is really a custom execution environment, or customizable execution environment, and decentralization, speed, security, composability. Those are all things that you put inside, the recipe basically of the use case that you're building, and you need to be as strong as possible to attract users that might care about decentralization, might not care about decentralization, they might care about speed, but not care about speed, and so on and so forth. That's why you do an Appchain in the first place.
Right. All right, and before we leave, one last question since we're short on time. Name 1 to 2 projects that you're most excited about in this cycle, and then we'll leave.
This cycle,
This cycle.
I'm the last one.
It's hard to pick one or two. I will say, within the Appchain space, we actually invested in the Ribbon Finance team, which now launched Avo, and they're a team that started off on a chain and then launched an Appchain and a new product. I think they just keep on shipping, and they're doing an incredible job. We're also obviously very, very excited about Nisha and what that's going to unlock for builders going forward.
Appreciate it. Yeah, in the next few months, we've got Anoma and Anoma's Namada coming out, which everyone should definitely check that out. We think they're very cool. We're mega bullish. Same for Anisha. So just check those 2 projects out. Keep your eyes and ears peeled.
Yeah, for myself, it's risk zero. I think zkifying any compute it's going to be very useful, and then Gavelot, which is going to provide a decentralized zk compute.
Yeah, so I brought it up recently, but Skip Protocol, I think, doing some really fascinating stuff. Really excited about what they're building. And then, the talk that you had right before this with Noble, I think Noble's like building a really fascinating use case. So really excited about what they're building in that space.
Look, I'll stay on the Appchain space, and I'll stay Penumbra.
Penumbra, exciting. All right, very cool. Well, thank you everyone, and I will share my last pick, which is Vistara. Remember that name, it's coming soon, all right? And shameless plug, Interchain FM is going to host a podcast with Inisha today, and it will be coming out soon, so watch out for that.
Hell yeah.
Thanks. Give a round of applause to the panelists for sharing all this awesome alpha for you to make yourself a lot of money.
That was great, guys. Fuck yeah, good job. Get a group picture, guys? Yeah. Good picture. We've got a good spot. Yeah. Sorry, guys.